afternoon, everyone, and welcome to Stock Market Today. It's Coram and Justin Nielsen here with the breakdown of the action in today's session, where we saw the major indexes down, but we're not broken here, Justin. We can't go into our bunkers just yet,
Right.
but we'll get into the technical action soon.
Yeah, and more importantly, there's still some stocks that are setting up. So we'll take a look at Range Resources that had kind of a break above a downtrending handle today. Also Costco that's setting up, and we'll take a look at Hyatt and see if it's time to look at travel again.
All right, we will do that. First, let's take a look at the major indexes. So the NASDAQ today down about 1.2%, but it didn't lead the losses. That was for the Russell 2000 down 1.7% today. Less hard hit. We had the S&P down 0.4%, and the Dow down 0.2% today. So Justin, we've been in this strong rally and a decline of more than 1% for the NASDAQ, just bringing us down to right around that 10-day moving average.
Yeah, and I mean, really, I think we got to look at this 12,320. We were talking about this so much, that June 2nd high. Now that we've gotten above that, can we stay above that? If we start kind of breaking back below it, back through the 10-day moving average line, that's going to be a warning sign. But look, today's action wasn't really unexpected based on yesterday's action. When you get a downside reversal like that, with a strong gain to start, closing negative, and even though it was down only a tenth, it lost a lot of ground yesterday and closed at the lows. Volume picked up. That kind of action, you usually expect some weakness after that. And so this is kind of managing within expectations at this point. And the fact that they're all holding at the 10-day moving average line is pretty good. But you do have to keep in mind, hey, there's some resistance levels that we could be hitting. So while things aren't broken yet, you have to be aware that we could have hit resistance and we could be in for some trouble here. Going over to the S&P 500, whereas the NASDAQ kind of got above those June highs, the S&P 500 really hit its head right on that level and got knocked down. The Russell 2000, as you mentioned, was the hardest hit today, and that was the other one that actually did get above those June highs, but kind of came right back to those levels. So really, we're going to see how we hold over the next couple days here. We've got some important inflation data coming out. That has been one of the things that has been really kind of driving things, as those job report numbers that came out on Friday really kind of put that 75 basis points for the Fed raising and hiking back on the table. And as more data comes out, that's going to give a clearer picture of what the Fed might do with their rate hiking or cutting.
No doubt. And, I think this is what technical analysis is so great for, because it really does give us those clues. It's the closest thing we have to a crystal ball. It's not a crystal ball, but I feel like if you are continually looking at all of those levels and beyond that, also looking at all of the different scenarios that could unfold and be ready for all of those to unfold or to play out, then you shouldn't be caught by surprise when you do see maybe a little bit of a shift in the change of the tone.
Yeah, and I don't want to use the gambling analogy too much here, but I do liken it to blackjack. The blackjack is really a game of probabilities, right? And for those card counters out there, they know how to count in such a way to know when the deck is favorable and know when it's time to maybe go with a little bit heavier bet. It's not guaranteed, but they just know that the probabilities are slightly more in their favor, and that can be enough. Same thing here with the market. When you see a day like yesterday, you know that the probabilities are a little bit higher that you're going to show weakness. And when that happens, you're not too surprised by it. But if that weakness continues, well, then that shifts the probabilities of this rally in a different direction, and you're going to have to react accordingly.
Yeah. And there's a very complex formula, of course, with a lot of different factors that go into this. But I love that analogy there. I think that's a great way to make these kinds of things understandable for people out there, because we want the odds in our favor, and we want to be able to pivot when we get new evidence, or that next card on the table.
That's new information, and you have to put that into your kind of model of what your expectations are, and again, play accordingly. You gotta play with the hand that you're dealt. You can't just keep on wishing for a better hand.
Exactly. All right, well, let's take a look underneath the surface. Chip stocks today, SMH taking it on the chin, down about 4.2%, Justin.
Yeah, so this is an area where I mean, we had the Nvidia warning. We've been seeing some softer earnings, and so this is an area that's been kind of driving the Nasdaq a little bit lower. So again, it's when the Nasdaq composite comes down, a lot of these chips are very heavily weighted in there, and so if you don't have the chips working in your favor, it's going to be hard for that Nasdaq to kind of overcome this weakness. But again, it's right now, it's right at the 21-day moving average line. We're still above the 50-day. So not broken yet, but there have been some signs of some trouble. So you do want to see that support come in here relatively soon.
All right, and now let's take a look at oil and natural gas with a look at USO here. Roughly flat for the day, Justin, but UNG, also check in on that, up about 2.7% today. And there are a number of stocks, one of which we will take a look at, that look kind of similar to this.
Yeah, so I mean, XLE, which is the energy ETF, sector spider ETF, that was one of the best performers today. But as you just noted, it wasn't an equal performance, right? Oil and gas, sure, but oil was very different from gas, and the natural gas was really where it was at today. So this is important when you're looking at stocks, individual stocks, to know, hey, when it's in the oil and gas industry, which is it? Is it oil or is it gas? Because that's going to make a big difference in your performance for the day. You kind of got to just know what you own.
Yeah, absolutely. And that's a great segue to a look at RRC Range Resources, which is one of the biggest natural gas producers in the U.S., up almost 7%. And I love being able to draw those trend line alerts on MarketSmith, because right when it popped above that level, I was able to see it this morning. I didn't buy, but this was added to swing trader, so that's great.
Yeah, and you couldn't have, because we would have restricted it, and then you would have had to sell anyway, right? So, and you might have been busy on the IBD live show, and it's so funny because you just had up that UNG chart, which is the natural gas, and this Range Resources, I mean, it was almost like, hey, did you change the chart? It looks very similar, right? It has that cup with handle pattern, but here's an early entry, right? When you break that downtrend, rather than waiting for it to get all the way back up to the high of the handle, this can offer you an early entry. And in particular, what we like to see when we see this kind of move is some volume behind it. And one of the things we noted as we were, before we put this on Swing Trader, was that the volume looked like it was going to come in at the highest level that it had been in for a few weeks. And so while it didn't look like it was going to be above average, it was still pretty impressive compared to recent action. And so for Swing Trader, we can kind of use that shorter term time frame to make our decisions. But this is still looking okay for a position trade too. So just because we put it on Swing Trader doesn't exclude it from the realm of possibility from position trades. In fact, LNG, another stock, this has been Cheniere. This has been on leaderboard for a while, and that was doing okay today. So there's a lot of different ways to play this depending on your time frame. But right now, Range Resources, this is one we played before for some pretty good success, and so Swing Trader's given it another shot. And for more information, you can also take a look at the Stock of the Day article that was written by Kit Norton today, because it goes into a little bit more of the details of, hey, what's going on with with Europe, and how does that affect the U.S. U.S. prices and demand and everything like that. Kind of a boon for it right now. And as you mentioned, there are those different projects it has going on where some of these are large areas of shale that the Range Resources has exposure to, and that can be a very big boon, especially with the demand in Europe being as it is and the supply being really rough in Europe. That's kind of helping U.S. prices.
All right, one to watch, and you can get to that story on the Stock of the Day on the homepage of investors.com. And moving on, let's take a look at Costco, COST, working on a cup with handle here now. I remember when it was just getting above the 200-day line, we hadn't seen a handle form yet. We were saying that would be a good development. Well, it is now delivered on that, at least for now. off by a little over 1% today in light volume. So volume trickling off in this handle here, and we have plenty of time before earnings. So this is a setup to watch.
Yeah. And, sometimes you do get what you ask for. So the situation here is that we're getting a little bit of a handle. And you know what? It's also important on days that are down that you don't just look for stocks that are, what stocks are up today? That can be very typical, where an investor will look and say, just what stocks are moving today? What stocks are up today? You have to do your homework and be looking at the stocks that are setting up too. Just in the same way that you had that trend line drawn on Range Resources, you want to be looking for the next stock that might be breaking out, might be breaking a trend line. So I like the look of Costco right now. And look, it's not alone in this group. We've had, we put BJ's on Swing Trader. That ticker symbol is BJ. Ollie's Bargain, that's on Leaderboard, OLLI. And then you've also had Dollar Tree, Dollar General. These have also been stocks that we've been talking about. So it's nice when you have some confirmation in other members of the group. And look, this group is, while the major discount chains are still kind of, where Costco is, are still like at 75, some of these other discount retailers are in the group that is 11 out of 197. So that's worth noting. But most important, do your homework, look for those setups before the breakout so that you're ready when that breakout happens.
Well, while you were giving your awesome analysis there, Justin, I did set a trend line alert on this one, so we'll have to see. Good way to keep tabs on a lot of different stocks there. And last but not least, let's take a look at ticker Hyatt. That's H, up about 2.7% today. We did have earnings. It's not above average volume coming into the stock. It still looks like it has work to do to me, Justin, but is now going to be the time for travel stocks. It looks like maybe, we're seeing a little bit of improvement in the numbers now.
Yeah, certainly there's a lot more strength in bookings. They're seeing a rebound in business travel. And look, Hyatt earned 46 cents a share above estimates for 6 cents. I mean, that's a pretty big big beat there. Revenue was a little bit softer than expected. So, it's not like it was a perfect thing there. But look, I was just on vacation. I was actually staying at Marriott, one of the Marriott properties, a Sheraton out in Carlsbad, to bring my son to Legoland. And so look, people are traveling again, right? This has been a huge demand that's been kind of suppressed, and people are getting out there. But I gotta agree with you, Allie. I'm not too excited about getting into this right now, because in the same way that the indexes have kind of hit their heads on that resistance, we've got that 200-day or 40-week moving average line, if you're on a weekly chart, really looming on this one. So you've got some pretty good strength here coming into that. Now it's a matter of, what do we do from here? If we break above, hey, that's going to tell us one thing, and maybe we've got some strength. I would actually prefer for a little bit of a handle or some type of break to happen right here, some sideways action or a nice drift lower, and then let's try and take out that 200-day moving average line. But if it goes straight up through here, that's going to be making me a little bit more hesitant. And if you go back to the weekly chart, look, we just have to, kind of be very forthright here that travel has not been easy. There have been a lot of these setups where it looked like it was ready to go, and it just didn't go anywhere. It would go up for like a few days, and then it would get its head handed to it. So just because we've got 4 weeks up in a row doesn't mean we're out of the woods yet. Let's see how it handles itself at resistance. But it is important, again, just to do your homework and be aware of some of these stocks that might be coming up, some of these industries that might be improving. This industry right now, leisure, lodging, is still 173 out of 197. So it's got some work to do, as you mentioned.
Yeah. Well, some great reminders there, Justin, about how we should be casting that wide net and looking for different rotations or potential leadership that could be brewing underneath the surface. Thank you so much, everyone, for tuning in. We will see you right back here tomorrow after the close. But before that, we will see you on IBD Live. We hope you join us for the first 90 minutes of trade. Investors.com/IBD Live for all the details. See you there, everyone, and see you back here tomorrow afternoon.